Good afternoon, good morning, everybody, depending on where you are joining us from. I'm Eric Linask, I'm with TMC, and it's my pleasure to kick off today's live webinar, which is called Combating Crisis Through Digital Financial Solutions. Now, certainly you're all aware, like every industry, COVID-19 has certainly left its mark on the financial sector. You know, we've seen so many banks that have closed their branches throughout the pandemic. We know the volatility that the stock market saw. Consumer spending has been down significantly, and millions of businesses and employees have really suffered throughout the past several months. All through it, we've seen some great innovation from the tech sector, and we've heard so many times the term new normal used to talk about the changes that have come from this pandemic and the innovation, things that are likely to become a permanent part of both our business and social cultures. When it comes to fintech, though, I really feel that it's more accurate to uh, portray COVID-19 as an accelerator, and it's just had an opportunity to advance the adoption of many of the digital solutions that were already emerging. The truth is that despite all the challenges that we faced during this crisis, the fintech sector has actually created opportunities for governments, businesses, and for customers at a time when so many have been suffering setbacks. Before we move forward, having kind of said that, I'd love to hear from you and our audience and understand where your level of understanding or association with fintech concepts is. And for that, I'd love to ask you to answer one quick poll for us. Um, how familiar are you with the fintech concepts and business? Very familiar, you're in the fintech sector. Very familiar, though you're not in fintech, but plan to diversify into fintech. You're slightly familiar, planning to diversify into fintech, or slightly familiar and educating yourself without any current plans, or you're not very familiar and are just learning some of the concepts of fintech. The truth is that over the past years, we started to see a number of evolutionary changes in the financial space. Things like contactless payments, digital banking, online shopping, they've all been on the rise. And these days, there's very little that you can't do digitally when it comes to your money. We know Apple and Samsung and other major corporations have been pushing digital payment opportunities for several years. And more recently during this pandemic, businesses have largely been limited to curbside pickup. So retail stores, restaurants, and others have been driving online transactions. Digital banking at the same time has increased at most banks, with so many of them reporting increased use of both mobile apps and online banking. And of course, if you've got kids, you know that in-game purchases have become a huge part of their world as well. During this past quarter, MasterCard says it saw a 40% increase in contact payments, and that period, of course, started even before this pandemic hit its peak. That includes tap to pay and mobile payments. It also saw a huge jump in card not present transactions as people moved increasingly to online shopping and payment methods. Overall in the US, we saw a huge uptick in contactless payments during the pandemic in March and April of this year specifically, a 150% jump from the previous year. By and large, most experts agree that digital is the future of payment. And that's really what Jay Jayashima, who's Chief Technology Officer at Panamax, is here to discuss today, and to answer some of your questions about how to take advantage of digital financial solutions during this ongoing pandemic, but also how they can benefit your business beyond COVID-19. Jay's going to start off with some brief commentary about Panamax and why the company is able to help frame the positioning around the fintech environment. He'll get into the current state of the fintech industry, as well as some of the challenges and opportunities that are driving the space, and how they've been created by the pandemic. He's going to provide some of his insight into why digital financial solutions are critical for working not only through the current situation, but how they're going to impact the future of banking and business, along with a brief look at how some of the new solutions are driving the fintech space, including the MobiFin Elite solution. Some of the key questions that hopefully Jay will be able to answer today include things like, how can you keep your business afloat amid the crisis? What is the fintech ecosystem going to look like post COVID-19? How can you realize the benefits of fintech in financial inclusion? And of course, why is this the right time to adopt digital financial solutions? Um, you know, why don't we also take a look and see where our audience is? So we've got a pretty good mix of people who are actually in the fintech industry, some who are slightly familiar and are looking to diversify, and fortunately some that are not familiar at all. So a nice broad mix, Jay, for you to kind of frame your commentary as far as where our audience is. Before I hand today's session over to Jay, just a couple of quick additional housekeeping notes. If you are interested in a copy of today's presentation, contact information for Panamax will be available at the end of the session, and you'll also be getting a follow-up email that includes that contact information, as well as details on accessing the on-demand version of today's webinar, so you can certainly share that with any of your colleagues who haven't been able to join us live today. We've also got some time at the end for Q&A, and I encourage you all to use the interface on your screens to get your questions to us at any time during the session. And with that, you've probably heard enough from me, so let's really get to what we're here for, an update on how digital financial solutions are solving some of the problems that so many people are experiencing today. So Jay, with that, the floor is yours.
All right, yeah, thanks, Eric. Thanks for a very good introduction there to the issues that are current and especially the impact on the fintech sector. And also, it's great to understand the makeup of the audience. This has always been a challenge. When you create a presentation, we'd always like to know what the mix of the audience is, especially with respect to the familiarity with the concepts we're going to be talking about. And in this case, it'll be good to understand their familiarity with the concepts of fintech, the fintech markets, of fintech business, etc. And it looks like we got a very, very smooth mix there. And I'm glad that this presentation probably should make sense to all the three categories of the people and their understanding. So I would like to start off with a brief about Panamax. By way of introduction of Panamax, we are a global technology company headquartered in New York. Our key markets of business are in the Africa, Middle East, APAC, and Latin American regions. We have a regional presence in the US, India, El Salvador, Kenya, Peru, Senegal, United Kingdom, and Czech Republic. So we have pretty global presence. And from the fintech point of view, some of the stats are like we have 40 plus global mobile wallets today in operation, and we have 100 plus million fintech transactions per year going on. And yeah, and the poll that we conducted, yeah, the results were pretty good in terms of the makeup of the audience, and I'd like to kind of go further with the presentation. Yeah, I would like to hand over to Eric. Yeah.
Thanks, Jay. Yes, we have a second poll here for you. We'd love to, now that we know where your understanding of the fintech market is, we'd also love to know how you would describe the business that you're currently engaged in. You're a telecom operator, financial services provider, you're in banking, you're in a non-bank financial institution, or some other organization, whether that's government, individual consultant, or anything else for that matter. Jay, while we let our audience answer this question, any of these industries, any business, in fact, at all, really should have an interest in understanding what's happening around fintech, wouldn't you say?
Absolutely, yeah. I mean, it's like, even if you look at what matters most to the people are the finances, right? Like, so whether it comes from an individual perspective or a group perspective as an entity or, a business, finance is probably, the substratum for any operations, right? And yeah, I see that there's a tremendous interest in the fintech services across the verticals.
Let's take a look and see what our audience comprises. And got a little bit telecom, a little bit of financial services, but the majority is in other areas.
Wow. Yeah, absolutely. That's very interesting. Yeah. And yeah, I see that from the banks, there are not many, not many in the audience from the banking sector. The non-bank financial institutions, that's about 8%. Yeah, that's interesting that the others, we would like to understand more of the makeup of the others here, because that seems to be in the majority. Thank you, Eric. So yeah, before I launch into the technical section, or the meat of the webinar, I'd like to have present a brief message from Panamax. And as Eric mentioned, this has been definitely unprecedented times that we are living in, and we have never seen a pandemic of such global proportion that we are in the middle of right now. At Panamax, we are constantly striving to ensure the safety and well-being of our employees and of our communities where we work, live, and serve. And we have ensured employee safety, just as any other organization globally has done. Right? We have several measures, including work from home, remote collaborations, remote support, remote deployments, etc. And our aim at Panamax is to, excuse me, is to continue our premium support that we offer our customers globally. And yeah, there have been very challenging times here with the virus and with the lockdowns, etc. But we are constantly working with our customers to provide the best support we can without business interruptions, and while mitigating the risk of exposure to the virus. We also take this moment to applaud the Panamax staff excuse me, that have responded overwhelmingly in embracing this new work culture and the practices that we have put forth. And I'm very proud to say that we have successfully completed several new remote deployments and migration projects over the last 3 to 4 months. We wish you all the very best to stay safe, healthy, and curtail the spread of the virus. Our prayers and wishes are, and thoughts are with our colleagues who are infected by the virus, and we hope that they will bounce back, with good health and resume their normal activities. So with this, I would like to get into some basics of the fintech market. And if you look at the fintech industry, for those who are very new to the industry or new to these concepts, the fintech industry is basically an industry that enables the technological innovation in the fintech sector, right? And this flared up globally, fueled by the 2008 global financial crisis. And at that time, what happened was there were so many layoffs from the financial sector, and there were a lot of very brilliant people that found themselves out of jobs, and they started thinking about how do we kind of come up with certain solutions that can be put out in the market that can help the people, help the industries, etc. And we've seen a lot of fintechs come up since these times. And of course, the the emergence of the smartphones, these have helped with the fintech industry in a big way. And when the fintech industry started, they started attacking the small problems, right? There were numerous little problems that they were going after, and there were numerous products that were developed. Like if it is like a top up, there was a product developed for that. If it was for a microcredit or a microloan, there were products developed for that. But as the market matured, we are seeing that a lot of this siloed product approach has to be replaced with a platformification approach, so that in a very comprehensive manner we are able to address more of these fintech requirements across the industry. And of course, open APIs, and these play a very, very important role, as you'll see as the market matures, where the products have evolved to, and where they should be evolving towards. some of the attributes of the fintech markets, like it brings the best of need. This is where the fintech market started with financial inclusion. These were in the emerging economies where there were more people with phones, but not with, but didn't have the bank accounts, right? And this led to this also categorized as a problem called the financial inclusions. So the fintech started there with the need, and then it also brings the best of efficiency. There's faster movement of cash, and there's convenience where it is less to carry. You don't have to carry bulky wallets and things like that. You can disburse or you can pay, out of your smartphones or your phones, etc. And then there's the cool factor too, which is like the way of the new generation. Like a lot of people, they really love going to a coffee shop, for example, and pay using their Apple Pay or Google Pay, etc. So there's a cool factor to that. But definitely, from these attributes, you see that there is the applicability of the fintech to both the emerging economies and to the emerged markets. And in terms of the fintech investments, and we see that this is one of the most heavily invested industry. In 2019 in particular, we saw about close to $390 billion of investment made in this in the fintech industry. Major demand from consumers for customer-centric services. Like now, everything the whole fintech industry seems to be revolving around giving the best set of services to the customers. It's very customer-centric. And especially with the post-COVID social paradigm, which we feel, definitely it's the new normal that's coming. This will spur the fintech industries in a much more bigger way. And if you look at the fintech market itself, like the global fintech market size was about $127 billion in 2018, and expected to be about $310 billion in 2022. With a growth rate, a smooth growth rate of about 25%. Of course, this covers several markets. We are looking at the global wallet payments, we are looking at digital banking, we are looking at alternative payments, looking at the ACH. And so there are the industry analysts who are very actively tracking each of these markets. And these, and the outlook for, for the next 5 years, they are looking at so the demand for fintech services are growing at a rate of about 25 to 30% year over year. Now, it will be interesting to watch where this industry analysts or the market analysts look at the evolution of this industry post this COVID times, which means in the next 6 months, these numbers we feel will be boosted in a massive way, owing to the new ways that people are looking to transact and especially in the finance communities. So this will be very interesting to watch where this trends carry us towards with the post-COVID situation. And then finally, I would like to introduce who MobiFin Elite. So this is our product, and the fintech industry is one of the most comprehensive and innovative platforms that we have come up with. Whether it's like a business or a consumer, this platform provides a very good mix of any to any type of operation. And our primary markets, our customers that you sell into are the mobile network operators, retail outlets, the financial service providers. Then you have the banks and the non-banks financial institutions and the governments. A little about the non-bank financial institutions, because we see these type of organizations come up a lot in this in the fintech industry. And NBFI, as it is called, is a financial institution that does not have a full banking license, and they cannot accept the deposits from the public. And examples of the non-bank financial institutions include insurance firms, venture capitalists, private equity, currency exchanges, some of the microloan, microcredit type of organizations, payday loans, pawn shops, etc. There's a wide mix of these, that constitute this NBFI segment. And we see a lot of the adoption of the fintech services by these organizations who are really pushing the requirements for the fintech services. Now, talking about the pandemic crisis that we are in the middle of, we have seen definitely there are a lot of interesting problems that this has created, and globally. And what are the some of the immediate problems we see, especially in the banking services. And this is what Eric was referring to in the beginning. These banking services they faced a major disruption. And for example, in India, we have over 150 branches and 1.5 million employees. And this sector was very badly affected by the lockdown. So this lockdown has impacted the customers' reach, their quality of services, and hence the bank's profitability. And the second big impact that we see in the MSMEs segment, and MSME here stands for the micro, small, medium enterprises. And even the US, we have observed, this is one of the worst hit industries where, because of the lockdown, for example, you talk about the restaurants, some of the smaller retail shops, and they had to kind of, face shutdowns. And there are a lot of issues regarding supply chain disruptions, the non-availability of labor, the disruption and relocation of labor, etc. So all this has kind of impacted them towards in the liquidity issues, the mounting debts, etc. And we've seen some of the big problems that that has been that's been impacting this MSME segment. And if you see that in most countries around the world, the MSME segment accounts for the major portion, anywhere from 60 to 75% of the GDP comes from the MSME segment. The third area we see, in the prudential norms, and there's something called the CAR. I've just kind of defined this for the people who are not familiar with this. Prudential norms are regulations set up by the regulating banks or the central banks in each of the countries, and they do this for safe and accountable operations, or by the in-country local banks. And CAR stands for the capital adequacy ratio, and this specifies the minimum cash the banks need to maintain against risk-weighted assets. And this risk can be associated with credit risk, market risk, operational risk, etc. And what are these assets, right? These assets for the banks, the assets are any type of the loans, right? And there are different types of loans that the banks offer, and these are the assets. And so these banks are expected and mandated by the central banks to maintain a certain amount of cash, a percentage of the cash, so that they can provide loans to the people who need them. And this, because of the challenges, especially in the MSME segment, this has impacted the borrower's ability to borrow. And also for those who have already borrowed the money, they have problems servicing the debts. And so these prudential norms, especially, they're badly affected in the area of the capital adequacy. And what happens is, when there is a issue with the ability to servicing the debts, this causes the impact to the CAR, and these amounts start dropping in terms of this crisis situation such as this. And so this has impacts both to the banks and to the people who want to borrow and sustain their businesses. And then there's another segment, the export-import segment, which has been impacted badly. And obviously, these lockdowns in some of the export destinations, such as the US and Europe. So this has impacted the financial vulnerability of the export industries in various countries. And so resulting in their needing additional financial support. And then there's a volatility in the exchange rates that been introduced by the economic impact. So weakening currencies, they burden the importers with, obviously their costs go up in a very big manner, impacting the operating margins in big ways. And we've seen this, this being a very big problem with the exchange rate pressures during this pandemic times. And definitely these are an important signal to the global policymakers of the underlying economic stress that's been caused by this pandemic. And what are some of the resolutions, right now, that we are coming up with? in order to address this pandemic issues. So if you look at the banking services, right, like lending support to the banking sector and its borrowers, like this is a very important thing that across the industry, people are thinking, whether it's from the regulator side, from the banking side, etc. How do we support this? How do we support support these borrowers? And some of the other things are we can support the non-banking financial institutions. For example, these microloans, microcredit type of organizations. So these organizations they provide access to cash for the impacted people, whether it's the impacted businesses or the impacted people. These provide small, medium-term loans that people can avail so that they can get by these troubling economic times. And from the MobiFin Elite's point of view, we've seen that our platform or any platform in this space, if you support this concepts of remote dynamic KYCs, strong authentications, and digital bankings, this can provide some relief to the people, right? And the remote dynamic KYCs are the ability to kind of prove to the banks or to the other financial entities that the one who is trying to access the services is actually the person he says he is or she is, right? And so these are some of the areas that can provide some immediate resolutions to this banking issues or banking service issues. In the small medium enterprise segment, the impact, obviously injecting liquidity and easing these monetary conditions are very important. And we have seen that several countries have instituted these relief packages. In the US, we have seen the COVID-19 relief packages, they're going into the second version of it. The government of India has the direct benefit transfer, etc. So these the government is coming to the aid of these impacted businesses. And we have seen our platform also used heavily to do bulk disbursement to the tune of hundreds of millions of dollars via government subsidies in some of our customer installations. Then on the prudential norm side, relaxations of the regulations is definitely something that most central banks across the globe are looking at, and providing credit expansions, providing relief towards servicing debt. So they are instituting this interim moratoriums on payments to help people get by this situation. And obviously all this would tremendously impact impact this the capital adequacy ratios and the counter-cyclical capital buffers that these banks maintain. So, for example, some of the central banks, like the Bank of England, they have lowered the counter-cyclical capital buffer rate to almost 0%. So, saying that, they are saying, okay, go and help the people. Don't worry about, your assets getting into non-performing assets status. So these are some of the help that is being provided by the regulators or the regulating banks to the banking sector and to the people and the businesses impacted by that. On the retail payment side, we see that there are a lot of very interesting ideas that are coming up, and obviously with this COVID times, contactless payments are kind of getting more into the foreground. There's been a push towards kind of getting into the contactless payment, which seems to be the right thing to do. But especially with the pandemic situation, it seems like it's not only the right thing to do, it's just a mandatory thing, it needs to be done. So we are kind of looking at this whole concept of the alternative payments, and we're creating an ecosystem of our MobiFin Elite platform with the next generation of POS vendors and biometric vendors, in order to provide proximity payments. This could be near range NFC ranges to about 30 meters of range. And so this enables there are various ways this can be used, whether it's in merchant payments, toll roads, parking structures, etc. So one of the things to watch out is kind of this alternative payments industry seems to see a big boost in the coming times. And volatility in exchange rates, this is something that definitely the G20 and the affected countries have to work together and to direct coordinated intervention to stabilize these markets. And even from the Panamax side, we have seen that to we are supporting some of our customers, challenges with their payments, by providing them interim fixed exchange rates, based on some of the pre-COVID times, so that we protect them against these unwanted depreciations and currency swings, etc. So a closer look at the MobiFin Elite platform, right? The platform is we can categorize it as in four categories. One is it's a wallet platform. It's a comprehensive wallet platform with various concepts of sub wallets, pockets, parent-child sibling wallets, etc. And these wallets can be linked to either the bank account, trust account, cards, etc. And the Elite platform is also a payment platform. So we have comprehensive payment platform capabilities for merchant payments, peer-to-peer payments, bill payments, tax collection, subsidy disbursements, etc., or even the ACH. And the third is it's a banking API platform. So we are embracing these concepts of open banking APIs, internet banking, mobile banking, which is like digital banking. We are embracing the concepts of core banking interfaces, agency banking interfaces, etc. And finally, the Elite platform is also a value enhancement platform. And we provide flexible commissioning, loyalty rewards, interfaces to campaign management, microcredit, microloans, servicing platforms, etc. So in this case, we are creating this ecosystem of partnerships in order to provide more services to the industry. And flexible commissioning is something that's very important, because this is kind of an innovation that a lot of our industry is looking at. Like, for example, you have a network of agents who are delivering certain services, and if they deliver more than a certain amount of threshold of services over a period of time, let's say you do more than $1,000 of service in a one-day period, then we would automatically will up your commission, let's say from 3% to 5%, etc. So a lot of interesting innovations such as those are built into the platform. And when we looked at the MobiFin Elite, the core architecture and what we need to focus on, obviously we talked to some of our customers in order to get a view of what matters most to them. And we saw that the first most important thing is the security and fraud. This has been the topmost in the minds of our customers. That how do you protect our customer data, our access and clients? And we see that this is definitely the very right problem, because especially in today's world, with all this hacking and all this fraud events, these are multiplying, and it's almost it's present globally. There's and in fact, one of the interesting statements that I've heard some time back is that there are only two types of entities in the world today, one that has been hacked and one that will be hacked. And there's a lot of truth to this, and and this has been reflected in some of the discussions that we had with our customers. And controlling their costs, the Capex and OpEx, and optimal TCO. This would be another big thing. With the maturity of the fintech markets, right, where we are seeing the products emerge from the small siloed products into this massive nationwide deployment of fintech services. So immediately this has called for a massive scale of deployment. So with a non-platform based approach, obviously, to cater to this type of scales that we need, it'll take a big footprint of resources, of servers, etc., in order to cater to these big scales. And this would kind of put the costs up tremendously. And this is something that we have heard, especially in the ACH sector. There are these ACH organizations trying to come out with the global ACH services or within their country, and the national ACH services. And for this, the number of transactions going through this, they're anticipating huge volumes of transaction, closer upwards of billions of transactions per month. And without a proper scale platform approach, the cost of deploying such a network would be tremendously high. And this is something that they're already observing. And they said, like, no, this type of cost will not work for them. So this capacity and scales, like, aspect is very important. Though this kind of have their origins in how you architect the platform, how you engineer the platform, how the software engineering is done. But the impact of this is directly felt in the Capex and OpEx spending that the customers would eventually have to do. And then the flexibility is like, one of the things that has come up, which is very important for the customers, and the flexibility to deploy new services and dynamically modify existing services. And one of the things that the customers said, like, they cannot handle is like take the platform down again and again to kind of make changes. And also they said, like, with this, like, market maturing, there are a lot of interesting services that they wanted to kind of look into. If hey, let's try this out and see if it works or not. So these type of things, like, cannot be done without the flexibility. If you want to experiment with a small thing, then you will have to tell the vendor to go back and design the thing, and then they come back 3 to 4 months later with an engineered service, and and then for all these services may not work. And so keeping the flexibility in this aspect is very important for the customers. And of course, then they wanted the deployment flexibility. And this could range anywhere from a pure cloud scale deployment, it could be in a public cloud, versus on-premise, and anything in between. So there's a wide spectrum. And so, so the deployment flexibility has to cater to a lot of these hybrid type of deployments. So in short, like we are saying, there are 3 issues that the customers have come up with. This is the security, scale, and flexibility. And these are the 3 things that we have, MobiFin Elite platform has addressed. So in terms of security, like one of the things, mechanisms in security is the elliptic curve cryptography. And we have been one of the early adopters of this technology. And ECC is definitely, a very advanced security mechanism compared to the traditional, the current RSA and AES mechanisms. It's like cryptographically very strong compared to the RSA and AES, and computationally it's very efficient. So which means like in mobile devices and and resource constrained IoT devices, we can kind of have a very good implementation of the ECC. And we have built this ECC ground up, and we use ECC for all aspects of data, whether it's like data in flight or data storage on our platform. So the second aspect of security is like, there is the authentication, strong customer authentications. This has been the focus of our regulators, such as the PSD2 in Europe. So they have come out with, extreme authentication capabilities, like, from device authentication, user authentication, API authentication, and these are with time set tokens, which expire, and authorizations, re-authentications, etc. And with a combination of biometry and two-factor, multi-factor authentications. So we have taken this very seriously, and we have implemented the full capabilities of this strong customer authentication requirements. And of course, there's always this battle between the merchant associations and these regulators. The merchants always want, frictionless buying experience for their customers, but the regulators know that providing this frictionless buying experience will cause a lot of security issues and open up gaping security holes. And so there's always a constant tussle between the merchant association and the regulating bodies to see how much of strong authentications is needed. So we took the approach that yes, this is the whole thing is configurable. So you can set up your authentication based on the safety that you perceive is needed in your organization or in your operating environment. So we can go anywhere from very minimal authentication to just a user ID password to the most detailed, or to the most or the strongest customer authentication possible. The other one is like, a lot of these fintech services, they are invoked from the mobile apps and the web applications, right? So, and these are inherently flawed in terms of, providing the vulnerabilities, and the hackers, like, they absolutely know this game in and out. So there are organizations that have come up with very strong best practices in this area, and OWASP 2.0 provides like the industry's best practices, the latest best practices for secure web and mobile access. And this is something that's very important, as part of the implementation that we need to look at, because this will open up serious problems, security problems, if you're not following this best practices. Likewise, the velocity checks, this is to determine, to monitor, what type of activities are going on in the platform. Can basically it's you're monitoring a particular data item, for how many times this particular transaction has happened. For example, if it's a user ID or a device or an IP address, how many times have they invoked a particular transaction, and is this abnormal or is it within the limits? So based on these checks, we can basically fire off certain alarms saying that, hey, we are seeing more than normal activities in certain areas. So velocity checks are again a very important part, of the security that platform buyers need to consider. And finally, there is a security fraud and the AML. So there's a Bank Secrecy Act. So they have come up with a list of AML, the anti-money laundering thresholds that they have set. And when we talk to the central banks, they provide us with these details of what this AML should be, and we can configure those on the platform. So any good fintech platform out there should be able to configure this AML thresholds. And likewise, there are in the US, we have this Office of Foreign Asset Control, the OFAC. They have come up with multiple lists, which are the special SDN lists, specially designated nationals, then the BPLs, the block person list, sanctioned entities, sanctioned countries, etc. So we can take this list in to our platform, and we can consult this list and especially during the onboarding process, or in case of ACH, if you're doing the international ACH fund transfer, there's a mandate from the national ACH associations that if you're doing international ACH, you should be on top of this OFAC list before you send or push the transaction through, or you reject the transaction. So these are some of the areas of security that's very important for any platform to consider. So on the scale side, so this cost control is very important, and this can basically be best achieved through a platform that is properly architected. So we use microservices based architecture, in order to push non-blocking architectures, extreme performance. So this helps us to pack more into a smaller footprint. Right, and likewise, we have the concepts of hierarchical multi-tenancy, that's tenancy within tenancy, etc. And this definitely has Capex implications, and it helps with the Capex when you are looking at some serious deployments. Then there are concurrency patterns in order to push high TPS through the system. So that means you would like to get a higher transactions per second system over a smaller footprint, and obviously smaller footprint means lower costs. So some of these engineering patterns that we use called the concurrency patterns to push this. And obviously there are a lot of these core services that we have alarms, statistics, event loggers, and all this. And we make this data available to our customers so that monitoring of the platform is easier. And this has a direct impact in the OpEx, right? Because a smaller team can manage the platform better if you're providing the full visibility and the intelligence. And likewise, the flexible deployment would help, with the Capex costs and the OpEx costs. So the last part is on the end-to-end flexibility, and how do you offer a flexible platform? And if you look at the blueprint of any fintech platform, we are basically, the fintech services are, the services are being invoked from the incoming side. I have a mobile device, I have a web application, and I'm invoking either a banking application or a top up, or I'm paying a bill, etc., a bill payment. So what we have is seeing as a common thing is there's an API that is coming into the platform. So in our case, we have the incoming side, which we call the adapter, that take this API. Now we can get the APIs from various entities. It could be consumers, it could be agents, resellers, banks, etc. So we have to provide the flexibility to create these APIs dynamically and expose them, right? Because we don't want to go into a phase of going through a an development process to kind of cater to each one of these requirements. So we have a lot of these areas of dynamism that we provided to create these APIs and expose them. And once we get the API in, the data from these APIs are taken, converted into canonical form, and this feeds our core transaction side. So we have microservices, transaction flows, state machines, execution flows, etc. And with this, we are able to kind of like create custom flows for these services. And this is very, very important. So one particular service can be implemented in 10 different ways, depending upon the needs of the services. And likewise, on the outgoing side, like these vendor integrations, third-party integrations are very important. This can be like if it's a top-up case, you're dealing with a mobile network operator. If it is like a payment case, like maybe a payment processor, it could be a bank, etc. So we have the flexibility to take this data and kind of dynamically assign them to these APIs for the outgoing side. And this can be done without taking the platform down, because one of the key issues that we are seeing is that these issues with the turnaround time in order to do each vendor integration seems to take a very long time, right? And we are trying to minimize that, mitigate that problem by providing the dynamic capabilities here to do. So without bringing the platform down, I should be able to configure new vendors very quickly. So these are like some of the things that we have to provide end-to-end kind of flexibility, whether it's the incoming side or the core transaction side or the outgoing side. And finally, I would like to leave off with the alternative payment, which seemed to be a very big thing that will be impacting post-COVID times. So here we are kind of like teaming up with this next generation POS companies, which are Beacon BLE based POS technologies, and they have implementations of ECC, etc., on their devices. And we are the other ecosystem partner is the biometry companies that we are working with the finger, face, iris, and voice signatures. And then we are creating these mobile apps, which include the best of the ECC, the BLE APIs, and the biometry APIs. And using these three, we are creating a payment system, an elite payment system, which includes the best of the BLE POSes, includes the best of biometry, and the mobile app driven payment platform. So where do you use this platform? Where do you use this alternative payment platform? There are several applications for that. So you can start with merchant payment use case. So in this case, you can actually initiate merchant payments. Like you go to a restaurant and you want to pay the bill, you can initiate this, the request right from 30 meters away, and you can finish the payment. So then there are toll road use cases, right? Like you're driving through the toll roads, you don't want to reach out and then put cash or coins into the receptacle bin, but using this elite payment mechanism, you can these POS devices which are in the toll gates, they can immediately based on the proximity, they can sense it and they can take the payments and you can keep moving without lowering your window on your vehicle. And there are retail shopping use cases, especially with the COVID times. We have seen that people don't want to line up, they don't want to stand in the checkout lines. There's always this 6 feet distance that you have to maintain. So, and the people are also saying that in the retail shops they can only hold 50 people at a time. So that means we see long lines of people outside trying to get in. And one of the areas that we can mitigate is that using this alternative payment mechanism, the moment you finish your shopping, we can automatically invoke the the invoice can come to your mobile app. You can invoke the payment of this right from the mobile app, and then you can walk out of the shop. So this will take the necessity of standing in the checkout lines. You can remove that, and this will you see a lot of this in the post-COVID times that will serve the communities better. Then the vending machines. Today, there's a lot of contact with the vending machines, and one of the things that we can do here is that once you walk up to the vending machine, once you come close to it, immediately the POS chips which are on the vending machine can communicate with your phone. It can provide you with the choices on your phone. You can make your choice over the phone. You can initiate the payment over the phone, and then the phone can then convey the digital receipt to the vending machine, and it will disperse the product. So here in this case, again, we are minimizing the contact in the vending machine. And likewise, like parking structures payment, right? You just want to drive out, you don't want to pass the bill or the credit card, etc., for payment at the parking gate. So so proximity payments here definitely help to kind of like minimize or kind of remove any contact that is needed. And likewise in the transportation use case. So these are a number of use cases where the alternative payments can play a big role, and especially will be appreciated in this post-COVID times, where you can do these type of transactions without reaching out to to pay with a card or cash or or any paper. So with this, I would just like to stop here. We have covered quite a bit, and I think there are a few other set of poll questions that we'd like to kind of get, and I would like to hand over to Eric to kind of push those poll questions.
Thanks, Jay. So Jay a little while ago talked about some of the things that really matter most to customers when it comes to their financial technology. He talked about security, scalability, and cost and flexibility. And what we'd like to hear from you is which of these factors do you consider most important when it comes to a fintech platform? Again, security, scalability of platform, flexibility, or you're not sure. So Jay, while we let folks answer that question, you kind of talked about what's been happening, kind of the impact of COVID-19 and some of the immediate challenges and immediate opportunities for fintech. How do you see some of these things changing around fintech in the aftermath of COVID-19 as kind of we emerge from the pandemic?
Right. Yeah. I mean, definitely the pandemic with the social distancing, this has kind of definitely introduced a new social paradigm, right? Moving forward. So this whole kind of I feel the big impact will definitely be in the areas of alternative payments. Like how can you do payments proximity payments will be a big thing. And also how do you kind of uh, avoid congregation of people, right? Like for example, this even pre-COVID times, like we've seen, like for example, some of the economies like in Africa, right? Like to collect a subsidy, you have to walk to a certain office, right? You have to line up there. You have to get the disbursement, from the window and then come back. So all this, it takes time. There's too much of contact there, and also there's a lot of in some of these economies we see a lot of fraud being committed also. So with this post-COVID times, a lot of these will be done through remote disbursements, through kind of people kind of getting these types of services without going anywhere outside, right? And this we see will kind of play a big role, and that's why the security factor becomes very important. That if I'm trying to access these services remotely, then I better be the person who I'm claiming to be, correct? And there'll be a lot of implications in this side. I feel that security will play a big role. The ease of these services will play a big role, and definitely contactless payments, proximity payments, this will play a big role in this post-COVID times. And there's plenty of opportunity for the fintech players to kind of come in and provide these services.
Great, thanks, Jay. Well, you just said that you think security is going to be one of the biggest things, one of the biggest needs and demands, and certainly our audience agrees with you overwhelmingly, security being the most important factor in a fintech platform. And so I did want to ask, so when you were talking about ECC when it comes to security, now there are probably plenty of parts of the ecosystem that you talk about who may not be familiar with ECC and are really only used to dealing with more traditional security mechanisms of RSA and AES. So how do they sort of make that transition and use the ECC security paradigm?
Absolutely, yeah. I mean, definitely like I mentioned, we are the early adopters of the ECC, and we did that, when we did like a lot of this comparative study between, the ECC and the RSA and the AES. Um, one of the good things we did is we have a ground up implementation of the ECC. And when we did this, we not only looked at implementing the ECC from our side, but security is a two-way handshake, right? The parties that we are communicating with also need to have ECC, and we recognize that right in the beginning. And we also know that we are kind of more educating the industry on the concepts of ECC, etc. So what we have done is we have provided these kind of libraries that the people who are writing web applications or who are writing mobile applications can use, and they can call these APIs for this ECC security, very much like how they call you have security libraries for RSA and AES today, right? You invoke the APIs for encryption, you invoke API for decryption, you invoke APIs for doing the digital security, so for digital security. And we provided the same type of interfaces here. So we can make those libraries available to these third parties, so that can invoke these APIs, and thereby they can construct this, ECC encryption, and that can communicate with the platform. So we definitely would help them by providing these libraries.
Thanks, Jay. For those of you in our audience, one last quick little question. Are you looking to buy a fintech solution in the next 6 to 12 months? Love to hear from you on that one. Jay, let's continue with some of these questions. How do you see quantum computing play a role, and especially when it comes to security and maintaining relevance, of these security mechanisms?
Yeah, I mean, this is a very interesting question because, the quantum computing, right now, definitely it has kind of altered the complete underlying paradigm of how computing is done, right? And obviously, whatever can be done today, if it takes certain, you cannot even compare the classical computers, the kind of floating point operations you do per second. You cannot compare, it's not apples to apple comparison with the quantum qubit mechanisms, right? We definitely see that if you have certain algorithms that kind of take one day to break a particular security algorithm, quantum computing can probably do that in like 1 hour, right? And so one of the things is that the advantages with the ECC is also that we are using very small key lengths today. We are using only 256-bit key lengths. In classical computing or classic computers, that's more than enough. It takes like 45 years to break that. So obviously quantum computing can do that faster, but again, we can go up to the higher key lengths also, right? There's nothing that's stopping us from going to 1024-bit ECC key lengths or higher. So there would be like that type of leverage that we can use to complicate the problem further. And also, one other thing to know about quantum computers is the paradigm of security also changes there, right? They're talking about the qubit communication channel, which kind of can encode messages in a completely different manner using the laws of physics that are virtually unbreakable. So I think when quantum computing definitely is many decades away still, because the evolution there, they see that they are in the very early stages. It's if you look at the semiconductor industry, when we were at the vacuum tubes level, they consider themselves to be there. So it probably takes another 30 to 40 years before we see some meaningful systems coming out. And definitely, by then we can also see adopt to the newer security mechanisms that this quantum computing will bring about. Because again, we are talking about a completely different paradigm of computing here. So I feel that comparing the classical computers to the quantum computers, is not really an apple-to-apple kind of comparison.
Thanks, Jay. We're getting close to the end of our time, but we do have another question here. Can you talk a little bit about sort of the differentiating factors in the competitive market? What differentiates Panamax from technology and or a cost perspective?
Right. Yeah, well, the way we see it, obviously, when we develop a technology, we keep in mind that, this technology should be, able to play a very key role in a couple of areas, right? Like one is to help the businesses. So we are creating the right platform and the right software, and help the businesses run the services properly is one thing. And then also run the services in a very cost, optimized manner, right? And that's where we see that the TCOs are very important for us. And the way we employ technology to kind of come up with better TCOs is where we explain about the issues of scale. How do you bring the best of engineering thinking into providing very concurrent, very high throughput systems, etc. And all this is done with a view of controlling the costs and providing the best platform to our customers at the lowest cost possible, right? And that's where I think this technology plays a very big role in providing a solution that is amenable to our customers, with controlled TCOs.
Thanks, Jay. And I know there are a couple of additional very specific questions regarding some of those differentiators and the competitive market. And I know that Jay and his team at Panamax will be more than happy to get to those and respond to those directly and kind of get into a little more detail regarding your specific needs offline after today's event. But that really does take us to the end of the time that we have today. I do want to thank everybody in our audience for spending a little bit of time this afternoon or this morning with us, and certainly the team at Panamax for sponsoring today's event. And of course, a great big thank you, Jay, to you for sharing some of your expertise and insight with our audience. With that, we're to the end of our presentation. Thanks for everybody for being here, and we certainly hope to see you again here very soon. And in the meantime, hope you all are able to stay safe and have a fantastic day.
Thank you, Eric. I appreciate it. Yeah, thanks to everyone.